How to use a credit card. Using your credit card responsibly can be a step toward building a strong financial future and establishing an excellent credit score. Otherwise, it can lead to a mountain of debt you struggle to repay for years. So, what's the best way to use a credit card to build a strong financial future? In this episode, we'll explore when you should use your credit card and when not to use credit cards. Let's get started. When should you use your credit card? 1. Expensive consumer items. If it's expensive, it should probably go on a credit card. Credit cards offer one big advantage over cash payments and debit cards. When you put a purchase on a credit card, you're often protected against damage, theft, or loss of the item for as long as 90 to 120 days after the purchase. This card benefit, known as purchase protection, acts as a short-term form of insurance for products you buy with your card. If you buy a new tablet computer, only to break it a few weeks later, a credit card with purchase protection will pick up the tab to fix the damage. 2. Online purchases. Making purchases online often means dealing with sellers and merchants we don't know as well as the neighborhood mom-and-pop shop. Making online purchases with a credit card gives you better protection against merchants who fail to deliver on their promises since they offer better chargeback protection. But that's not all. Many credit cards also offer return protection, a benefit that allows you to make a claim if a merchant won't allow you to return your purchase for a refund of the purchase price. Return protection effectively extends the amount of time you have to return an item you purchased. Thus, if you can't return an item within a merchant's timeline of say 10 days, you may be able to file a claim with your card company to get a refund of up to $250 by mailing the item to the card company within 60 days of purchase. 3. Gasoline. Many cards offer high rewards when you use your card to make a purchase at gas stations, but there is another reason to use credit cards to pay for gas. Gas stations are one of the places where card numbers are most frequently stolen. Gas stations have become a hotbed for card theft because they were allowed a 3-year extension to install chip readers on pumps, making them one of the last remaining places for sophisticated thieves to collect card numbers and empty the accounts of unsuspecting customers. Credit cards offer more fraud protection than debit cards, limiting a cardholder's risk to just $50 at the very most. On the other hand, debit card users can be liable for $500 of losses if fraudulent activity isn't reported in less than 2 days and can have all the liability for fraudulent charges that aren't reported within 60 days. 4. Meals at restaurants. Going out to eat? There's a reason to put the purchase on the card. Many cards offer double or triple bonuses on restaurant purchases, with some cards offering seasonal cashback bonuses of 5% on the spending category. In many states, getting 5% cashback on restaurant purchases is like getting a rebate for the sales tax. 5. Travel, airfare, hotels, rental cars. When it comes to travel purchases, credit cards are a no-brainer payment method for a number of reasons. First, most hotel chains and rental car companies prefer payment by credit card, with some companies outright denying the ability or making it more difficult to pay by cash or debit. And when it comes to rental cars, you should be eager to pay by credit card since most cars have some form of free insurance against damage to the vehicle. Second, the rewards you can earn on travel purchases are generally higher than any other spending category. The best travel cards offer bonus points on all travel spending, which can act as an effective rebate on each purchase you make. Bonus rewards worth 3 to 5 cents for every dollar spent on travel is fairly common. Do you want to know how to make the best use of your credit card points? Make sure you hit that subscribe button and stay tuned for our future episode covering that topic in detail. So, when shouldn't you use your credit card? 1. When you haven't paid off the balance. With credit card debt at an all-time high, it's wise to think twice before swiping your card. If you can pay your balance in full each month, or you've budgeted to pay it over time, using a credit card for purchases can be a great way to earn rewards on your purchases and build credit. But if you maintain a revolving balance on your accounts, the sky-high interest rate will always negate your rewards and propel you into a cycle of debt that can be difficult, lengthy, and expensive to get out of. 2. When you don't know your available credit. Don't swipe if you aren't sure what your account balance is. While most lenders have removed over-the-limit fees from their cards, that doesn't mean you should spend up to or over your spending limit. Utilizing 100% of your available credit can lower your credit score and make you look like a riskier borrower. Experts recommend that you spend, at maximum, no more than 30% of your available credit. That's one of the most important factors in achieving a good credit score. 3. When you're just doing it for the rewards, but you haven't done the math. When deciding between using credit, debit, or cash, it seems obvious to choose credit cards for the cashback and rewards. Some people even choose to pay their mortgage or rent with a credit card, but you must be careful. Before paying any bill, whether your utilities, rent, mortgage, or medical bills, always make sure there are no fees for using a credit card. More often than not, there is a 2 to 3% processing fee that can negate any rewards you might earn. In this case, it's best to use an alternative form of payment like a check or a debit card. 4. When you're afraid you have no other choice. When you're about to make an exceptionally large purchase at a retail store or in the doctor's office, you might be presented with the option to apply for a store credit card or a medical credit card. If you're feeling strapped for cash, especially if the expense arose due to a medical emergency or an unexpected broken appliance, these cards may seem like your only option. And in many cases, they seem even more alluring because they come with a 0% promotional financing period. But think twice. Fear makes consumers act impulsively, and adding pressure to the situation only makes things worse. Before signing up for a new credit card, thus adding a new inquiry to your credit history, you should stop and think whether it actually makes sense to use a store or medical credit card. 5. When you're applying for a mortgage. If you're applying for a mortgage or other loan products, it's best to be conservative with your credit card. The debt shown on your credit report will increase, thereby reducing your score and available credit while increasing your debt and liabilities. How best to use your credit cards? While a credit card can provide numerous benefits when used strategically, it can also lead to high interest charges, increasing debt, and a negative impact on your credit if you're not careful with how you use it. Here are a few best practices to help you keep your budget and financial health on track. Make your payments on time. Your payment history is one of the major factors that influences your credit. If you make your monthly payments late, it can negatively affect your credit scores and you'll likely be charged a late fee. Pay your credit card bill in full and on time each month. Paying off your balance in full and on time can help you avoid incurring high interest charges. If you can't pay the entire statement balance, pay as much as you can and be sure to make at least the minimum payment on time. Buy only what you can afford to pay for with cash. This can help you avoid overspending and help you stick to your budget each month. Stay well below your credit limit. Your credit utilization ratio, the ratio between the total balance you owe and your total credit limits on all your credit cards, is one of the criteria used to calculate your credit scores. Typically, a low ratio has a favorable impact on credit scores, while a high ratio has a negative impact. Aim to keep your credit utilization ratio below 30%. There are many benefits to keeping a credit card in your wallet, but there are some risks too. When used strategically, credit cards can help you establish a solid credit history, earn rewards on everyday purchases, pay off high-interest debt, or obtain interest-free financing. The trick to using these benefits while maintaining healthy credit card use is to use them to pay for items you'd buy anyway, pay your bill in full and on time every month, and keep your credit utilization rate low. That's it for this episode. Please give us your feedback in the comment section below. To watch more episodes on financial topics like this, hit that like and subscribe button. If you want to support us even more, buy us a coffee from the link in the description. Good luck and see you in the next episode.